Hey, podcast listeners. On today's episode of the Advice First podcast, we sit down with Scott Zimmerman. Scott is a specialist when it comes to life insurance, annuities, long-term care insurance, and we really focused our conversation on that last one, long-term care. There is a very high usage of long-term care, meaning skilled nursing care, home health care right now for our older population in the United States and worldwide. And so Scott really dives into, what are these costs? What's causing them? How do we protect against them? And some of the nuances to be aware of when you're using an insurance product to protect those assets and pay for those long-term care expenses. I'll let Scott do all the explaining, and I really hope you enjoy this episode just as much as I did. Welcome to the Advice First podcast. Scott Zimmerman, thank you for joining us on the Advice First podcast. So excited to have you here. First off, how are you doing?
Good. Really excited to be here, and thank you for having me.
Of course. All about picking the brains of smart, intelligent, experienced people in our field, in our world. And you are very specialized in what I consider a key aspect of the financial planning process, and that is kind of the risk mitigation. And I know what we were slated to talk about today is a conversation that I continue to hear about, not just from the professionals in our industry, but from the clients as well. And that is the idea of long-term care. And so what I'm excited to venture into with you specifically is, one, the realities of long-term care and what we're seeing a lot of people paying. I know your mother is probably someone that you've even thought about, what kind of expenses might possibly exist there. And so you really have the real life experience of living this, right?
Oh, yeah.
And so, but there's a number of things around long-term care. There's a number of ways about protecting someone against the risk of those expenses. And, even branching into that, which we'll get into, is like, what are all the different insurance possibilities that people could be looking to? So really just want to start the discussion around that topic. First, like insurance aside, let's just talk about long-term care. How many, why is long-term care such a hot topic right now?
Well, that's a really good question. I could talk about this. How long's our podcast?
30 minutes.
Okay, I'll do my best. So we're gonna I'll be able to answer one question. Okay.
Everyone take your seat.
Yeah,
please.
So
please
what's really important about long-term care is if you have any assets to protect, you should get long-term care insurance, because most people feel that if you need home health care, let's step back. What is long-term care? It's if you don't have to be old to be needing long-term care. It could be any age, but if you can't do 2 out of 6 ADLs, which stands for activities of daily living, that qualifies to have someone come into your home to take care of you, or nursing home, or adult daycare, or anything in between. So it's really easy to qualify. And the cost of care is super expensive. But besides that, statistically, 2 out of 3 people over the age of 65 will need some form of long-term care for an extended period of time. Those are just statistics. You can Google it. It's like 70% is the real number.
Wow.
Yes.
2 out of 3.
Yeah, it's not. Yes.
And so I would imagine that, is that your watch going off?
Got approved for my long-term care policy. Just got an email on that.
Congratulations. Because I know that's not hard to do. I'm sure we'll cover that too. So I would imagine that the reality of individuals like working professionals, so not yet 65, the reality of long-term care expenses might be tied to the experience that they're dealing or witnessing of their parents.
Chances are anybody who's listening to this, counting yourself, you dealt with it with your father. I'm not sure what care he required, but like I said, your father passed away at a young age. He probably You can be any age to need it. But yeah, the cost of care, if that's your question, it could be on the low end of $3,000 to $4,000 a month for home health care for part-time, and up to nursing home. It all matters what type of facility you want to be in. Do you want to be in Motel 6, or do you want to be in the Four Seasons? And there's different ranges. And also, if somebody has Alzheimer's, there's Alzheimer's care units that are even more expensive. So it all do you want your own room, or do you want to share a room? So there's so many different ways to calculate how much it's going to cost. Yeah. But on average, I would say in our state, California, the average cost of care for home health care is $4,000 to $5,000 a month on average. Sometimes a lot higher, sometimes lower. And then for nursing home care, it could be an average $8,000 to $9,000 a month. Again, sometimes lower, sometimes higher. It matters what type of care you're getting, what type of facility you're going to. Yeah. But
we're talking about $50,000 to $100,000+ a year,
and growing,
and increasing.
Yeah, just the cost of care keeps going up, and partially because we're living longer than we've ever lived. Modern medicine is just keeping us alive, right? Mm-hmm. It used to be, I don't know, you may be too young for this, but there was a guy, his name was Willard Scott. He was on the Today Show. Do you know about this? Do you remember this?
I do not.
Okay, he used to come on and say, this person just turned 101. Maggie Smith turned 101 today, and he would name all these people, because not that many people are living to be 100.
Right.
Now it's like, that's like, now these people are living to be 110, right?
It's like sitting through a high school graduation.
Yeah, now it is, yeah. Back then it wasn't, yeah. So just the cost of care keeps going up. More and more people are needing it because we're living longer than ever before. Yeah. And there's a lot of unhealthy people, but there's a lot of healthy people out there, right?
Yep. Do you see younger professionals buying this for their parents and not just themselves?
Yes, but having said that, I've been doing this. This is my been over 30 years doing this. This is my 31 years in business. Wow. I've been writing long-term care insurance since the very beginning. The cost of a long-term care insurance policy has gone up dramatically.
Yeah.
I mean, if it was 15, 20 years ago, it was so affordable. Now the cost of care, buying a regular policy it's 6 times as much as it used to be. Just really expensive.
Wow.
And they've changed the policies, by the way. It used to be you'd be able to buy lifetime benefits, and now there's no lifetime benefits available on a regular long-term care policy. You're limited to like 6 years on most companies. Yeah.
And so those 2 out of 3 odds of someone over 65 using long-term care in some form. Do you know how long those durations of long-term care last?
Well, it's 2 out of 3 people over the age of 65 will need it for at least 90 days or longer. So I'm not sure. The statistics aren't out on how long, because some people may only need it a week, and some people could. There's studies. There's case studies. People have been in a nursing home for 15 plus years.
Yeah.
Yeah.
Gosh.
Yeah.
And I would venture to say that's generally like the Alzheimer's related situation, where it's still a healthy body,
right,
and just the mind starting to deteriorate.
Yeah.
That's really interesting.
Yeah.
And so when it comes to the insurance side, this is something, and it's hard for the listeners, because I'm kind of biased being in this field and being exposed to some of the products. I mean, still relatively naive or beginner as it comes to long-term care, but from what, if I were a professional and really thinking about this, like, how do you justify buying insurance on it when, 1, the price might go up, and 2, there's still a 33% chance you'll never need it?
That's a really good question. So I would say this. Regular long-term care insurance, what was around for, probably 40 plus years, was great. It was affordable. You bought something and you hope you never needed it, but it was affordable. It's like car insurance, right? You pay for car insurance, hopefully you never get in an accident. Yeah. But it has changed. The rates aren't guaranteed on regular long-term care insurance. So the rates have almost I don't know any companies that haven't had a rate increase or multiple rate increases over the last 20 years. Rates have gone up, on average 25, 30% every time they raise the rates. Wow. So it gets really expensive. So you bought something, you're You're hoping you'd be able to keep it, and then the rate's gone up. But what's been really exciting is these insurance companies have come up with these really amazing plans so that you could pay for something and it's not a use it or lose it. You could pay for something and hopefully you never need long-term care. And hopefully that's the case. You're the 1 out of 3. And if you don't, your family would get back the money. And there's lots of different plans we can talk about. You want me to give you some ideas?
Yeah, let's hear it.
So one of the more popular type of plans is like it's a life insurance policy. I'm going to give you a couple ideas. So it's a life insurance policy. So let's use a round number of $500,000. You can buy a $500 life insurance policy, and you can use that death benefit as a bucket of money to pay for long-term care needs. So if you can't do 2 out of 6 of those ADLs, activity of daily living, or you have dementia or Alzheimer's, you'll qualify to tap into that $500,000 death benefit to pay for your care. So usually those type of policies are paying, you could tap into it 3 to 4% a month. So let's just say it's 4%. 4% of 500,000, you could pull out $20,000 a month out of your death benefit to pay for your care. Now, $20,000 would be a lot. That's just an example of what you could do. And maybe one day prices will be $20,000 a month. But it just shows how long once you eat up that policy, the policy's gone. Yeah. Hopefully you never need it. And then you get $500,000. You've been paying for something. Now your family gets $500,000 of death benefit, tax-free. Mm-hmm. Let's say you only use half of it for the care, then $250,000 will be left for your family.
Interesting. Yeah. What's a plan like that cost though?
For you, very little. For somebody in their 50s or 60s, it all goes by age and your health. I'm going to give you an example of somebody that's 46 years old, a young person. They bought a $500,000 policy, a woman. It was roughly, I just did this recently, it was roughly, I think it was like $3,500 a year.
Wow. It's
a permanent life insurance policy. It goes all the way to 100. If they need the care, it's there. If they don't, however they pass away early, there's $500,000. Yeah. And it's not term insurance, it's permanent insurance. Right. I just did one last week, actually, and this is not a great policy, but this is all the person can afford, and she was older. I think she was a 68-year-old woman, and she was putting in $250 a month, so $3,000. And the number, it wasn't very high, but it was getting her, I think it was $125,000 of death benefit. And she could tap into it for almost $5,000 a month. So it's not going to cover the whole thing, but it's going to cover a large portion of it until the money runs out. Or worst case scenario, there's a death benefit for a family.
Yeah.
Yeah. That's an idea. And there's other ideas too. I'd love to talk to you about.
Yeah, absolutely.
I could talk all day on this. I love this.
So that brings up a number of questions in my mind when I'm thinking about this, because I think from a consumer's point of view, sometimes they don't even know the next question to ask. Mm-hmm. But having been familiar with this space, there's a major difference in getting that $20,000 a month from a life insurance policy that you're able to loan against versus trying, actually needing care and qualifying for a long-term care insurance benefit, where those are paid more on a reimbursement basis. So can you clarify the differences between those two and how it might benefit consumers in either scenario?
Well, in my real opinion is it doesn't really matter if it's reimbursement or they're going to give you the money to pay for it. Because I think the idea there is to get the care. So a reimbursement policy literally is you're paying for the care and the policy is reimbursing you. Mm-hmm. The other type of policy would just give you the money for you to use it how you want to use it for the care. Yeah. So, I mean, if reimbursement, in my professional opinion, is less expensive, I would prefer to do that. I think most people usually do when I show them the differences. So that's one idea. And I want to can I go off on a tangent?
No.
Okay.
No.
I just want to give you some ideas. Somebody local, we're in Valencia, California. Somebody local in Valencia. I wrote this person regular long-term care insurance probably about 10 years ago. She was in her early 60s. And this is how she collected on the loan. She thinks I'm a hero, by the way, and I just did what she wanted me to do, help her. But she was walking her daughter's dog, the dog took off, big dog, after another dog. just one of those freak accidents. She fell down and broke her leg in 2 spots, her femur. Major surgeries, couldn't walk, couldn't get herself dressed, couldn't get herself to the restroom, couldn't feed herself because so qualified for care. But this policy, she was in such a mess from a broken femur, like in 2 spots, 6 months worth of care.
Wow.
So, but there's more to it. Can I give you a little?
Yeah.
More? Okay.
Yeah.
You look like you're going to say something to me.
Yeah, I was.
I want to give you one more example. My own father. So he was really sick. He was at home. He had COPD. He's on oxygen. He was in and out of the hospital. And my poor mother was taking care of him. By the way, they have long-term care insurance.
Wow.
He refused to have somebody come in and take care of the house. But what was happening, I'm not kidding. It's like I'm smiling because it was like so ridiculous. He put this poor woman, and I've seen this happen so many times, through hell, my mother,
Right.
which was horrible for my brother and I to witness because he was, they're in their 70s, get me this, get me that, pick him up. One day he refused to have someone take care of him. He was taking a bath, and he was wet, and he was 200 pounds, and he couldn't get up. He was like he was weak. My mother, imagine her leaning over a bathtub trying to get up this wet 200 plus pound man, right? Yeah. It didn't work. So finally my brother and I said, you have this care. Right. We're turning it on. And what happened, it saved my mother. Yeah. It saved my brother and I. I mean, they had the care. He was just too proud. But he ended up thanking us, like going, thank you, because it took care of the whole family. And that's what these policies are also about, not just the money, because money is one thing, but can you imagine if you're a single person and you're 60, 70, 80 years old and you need care? Who's going to take you? You're going to have your kids take away from their family, and of course they would, to drive over there and help you every time something happens or wipe you and clean you. It's not a good thing. Or can you imagine you're married and the same thing, you're 70, 80 years old and your spouse is supposed to take care of you? And I mean, it's just besides the money part, long-term care takes care of so many things, aspects for people, just peace of mind. And it's a small amount to put out to actually have peace of mind. It's not just, again, for me as a selfish person to get care. Right. Because who really wants to? I don't want to go to a nursing home, right? I mean, but that's what it's about, really.
Yeah, absolutely.
Yeah, taking care of the people you love. But go ahead.
And great examples. I've lived the very same thing, watching my dad and my mom take care of my dad and leaving work to take care of my dad and, taking time off. So it hurts, only to get yelled at and treated like a caretaker that was once, your
spouse. Exactly. I mean, you're still a spouse, but
right.
Yeah.
Changes the relationship. What do you see with, individuals preferring to be cared for at home versus going to the nursing care
Most people would always want to be cared for at home. So I don't know anybody that would want to go, like when you talk, you're really young.
Have you seen the games that they have in these nursing facilities? They're like bingo.
It's horrible. Night. It's horrible. It's horrible, but I think for someone who's healthy that really needs it, it's such a wonderful thing, right? To be taken care of. I have so many other thoughts, but you were saying something that made me think of something that I wanted to mention. Can I mention another type of policy?
Yeah, of course. Let's hear it.
Okay, because I think, I know we're limited on time, so I just think it's really important to talk about. Okay, there are these new type of, so we talked about the life insurance. Yep. And by the way, regular long-term care insurance is very rarely sold or bought because once again, the rates are not guaranteed. They can raise your rates. And when you pay for it and you either use it or lose it. And it's not necessarily that much less expensive than these different types of plans. We're talking about the life insurance, et cetera. But there's some really amazing plans that are also, besides the life insurance with the long-term care rider, that are super, super popular right now. They're basically like an asset care plan where you can, if you're liquid, you don't have to pay it all at once, but let's just say a lot of people have money sitting in CDs or investments, so they're never going to touch the money, and it's just earmarked in cash, CDs, whatever it is. You can literally put money into a policy and have the money almost all liquid. Some of the policies are totally liquid, or some of them are, almost all liquid, not totally liquid. And you can put this money in and get the money out at any time. So imagine if you had $100,000, you put the money into this type of long-term care policy. It's 100% liquid. You're one of those people who say, I'm never going to need it, but just in case. So you have the money liquid. It comes with a death benefit. So that $100,000, I'm making up numbers, may have a $150,000 or $160,000 death benefit. Something happens to your family, we get $160,000 instead of the $100,000 back. And it has a long-term care feature on there. So your $100,000 may be worth $300,000 of care. So it's one of those things that the person that says, I'm never going to need it, I don't want to pay for it. Now you can put money into an account. Mm-hmm. It's your money at any time. If you want 2 years from now, you say, I want it all out, you can pull it all out. You can pull out $50,000, whatever it is, and you can have the death benefit and the long-term care feature. And that is a really popular plan. There's a whole bunch of them like that have different features and benefits. But I think it's like for that person who has money, why would they not think about this?
Yeah.
Just in case.
Yeah.
Yeah.
Playing devil's advocate, what are the drawbacks of a plan like that?
The drawbacks, maybe you have money sitting in a market, earning income. Most of these type of policies, your 100 or whatever you put in, 150, 300, that's what you're going to get back, or maybe a little bit less than that actually. So the drawback, you're not going to make any money on it. Yep. But the other drawback is if you ever need long-term care, mm-hmm. I mean, you're going to end up paying for it. And what a lot of people don't realize, because most people aren't, but I'll say some people don't think about it because maybe they're thinking about themselves. If you're married, for instance, and just one of the spouses gets really sick, the government's not going to pay for your care until you're out of money. You have to exhaust all your own money. So you could leave, besides running through all your assets or your money, you could leave your loved one, your spouse, penniless and broke. Like they allow you to have almost no money. Now, the government will allow you to keep a house. So if you're married, the healthy spouse can keep the house. How are you going to pay for it? Mm-hmm. They allow you to keep a car, a wedding ring, and insurance policy, and I think it's $2,000. It's something like so ridiculous. Wow. Before the government's going to come in and pay for it, and chances are you're not going to be in one of those facilities the government's paying for it, because they're usually not the nicer places. Some of them may be okay, but you probably wouldn't pick that place to go to if you were paying for it.
Yeah.
Does that make sense? So I just think that's why I'm really passionate about it, because it's not just about you, it's about your loved ones.
Mm-hmm. Yeah. I mean, just go to the DMV and think of, man, is this somewhere I would want to spend my last remaining months or years as an elderly person being taken care of? And if it's not, then you probably shouldn't rely on Medi-Cal or government benefits. Yeah. I guess just a point of clarity, since we're talking about government benefits, Medicare being the primary health provider or health funding provider for these individuals, how long can they continue on Medicare, or how long will Medicare pay for long-term care needs?
It's a really good question.
Do you know the answer?
I do. So Medicare will cover the first 100 days as long as you've been hospitalized for 3 days. So if you come out of a hospital, then they'll cover the first 100 days of care. Yeah. But typically, most insurance policies have they usually will have a 90-day wait or a 100-day wait. So it kind of, it's perfectly timed for that type of situation.
Yeah, interesting. Yeah. And going back to those asset-based plans or asset care, is the definition to receive long-term care benefits, is that the equivalent of what you'd find in an individual long-term care policy?
Oh, they're the exact same.
So it's all
the same.
At least 2 of 6 ADLs, right?
Exactly.
That's crazy.
Yeah, they all have that 2 out of 6 of ADLs, unless you have dementia or Alzheimer's, and those are automatic qualifiers, because that's when someone could really hurt themselves.
Wow.
Yeah.
And so the asset care plans double or triple the amount of money people are putting into those accounts?
Let's just say on average, triple. I mean, it could be age goes by your age, how much you're putting in. There's a lot of, are you preferred, do you standard? There's a lot of little things that make up that.
What age, what's like the ideal age to look into and buy something like this?
I would say there's two things I would think about. One is the ideal age. Most people are buying policies, I'd say in their late 40s to mid 60s. Obviously, the younger you are, the less expensive it is. But the other thing is you really want to get a policy while you're healthy, because once you're unhealthy to the insurance underwriting, a lot of people are uninsurable.
Wow.
Yeah, so it's not. I'm not saying any of these things to scare anybody, because I just feel like,
I mean, you've laid it on pretty thick. We get it. We're scared.
2 out of 3 people will. I'm just kidding. But it is true. 2 out of 3 people. It's the statistics they're literally crazy to think about, right?
Yeah.
Yeah, because I don't think I'm going to need it.
Right.
But you know what I want to tell you? So I'm 53 years old. I know I don't look it. But I literally bought my policy when I was 40. I bought a policy when I was 45 years old.
Yeah. Wow.
That's when I started. Now I am in the insurance business, and I see things, and most insurance people are overinsured. Let's face it, because we see things, and that's the business we're in. But I think it's important.
Yeah.
Yeah.
So just latch on to Scott's long-term care policy, since he probably has more than just one. You probably have a couple. Do you have one you can just give away to one of our listeners? It has lifetime benefits, doesn't it?
No, it actually doesn't.
Oh my gosh.
It actually doesn't.
You didn't even
Lifetime benefits are gone. That's what I was saying. So my policy is a 6-year benefit, because that's what I bought.
Wow.
And also I want to tell you, things have changed. Even since they used to have 10-pay policies. You pay for 10 years, regular long-term care, and then it's paid for. So that's what I did buy.
Wow.
Having said that, even as an insurance agent, I just got last November, I think it was a 33 or 40% rate increase. Just like everybody else. It happened to me. It happens. It's like I bought a regular long-term care policy.
And that was for the 10 pay? They went back?
The 10 pay, for the extra, I bought it 8 years ago, so I have 2 more years of that rate increase. Yeah.
Interesting.
Some of our clients had 80% rate increases.
Oh my
80%. Yeah. Genworth. It was Genworth. Most companies that were selling policies 10, 15, 20 years ago, they're no longer selling them anymore. Now they're just maintaining their book.
Wow.
Yeah. It's scary. Yeah.
So that's why I presume you're a fan of the hybrid or life annuity products with long-term care benefits attached to them.
Well, yeah, 2 reasons. One is regular long-term care. Use it or lose it. Hopefully you never need it. Okay. Hopefully it's a big waste of money. But secondly, with the life insurance, your loved ones are going to get whatever you're investing in, they're going to get something back on if you don't need the long-term care. Yep. If you need the long-term care, it was a very good investment.
Absolutely.
Yeah.
At what point do you see clients self-insuring and saying, do I really need to fork over a couple $100,000 to protect against this?
That's a good question. A lot of people can self-insure. If you have enough money to pay for the care yourself, a lot of people will do that, and they don't need to pay for the care. But we have helped a lot of really, really wealthy people still get the long-term care insurance, because it's still, when it comes down to it, it's still dollars, right? It's still dollars coming in and going out. But more, not to beat a dead horse, but also it's about getting coordination of care. Even though you're wealthy, your spouse, and it still affects the family, right? Mm-hmm. Now they have to set up everything, where the insurance company be doing everything for you. Mm-hmm. All the coordination of benefits, taking everything, the responsibility off your family. But they'd rather be giving you love than not dealing with having to figure things out. Yep. So that's where a policy also helps.
Absolutely. So the one thing you said was, clients with enough money. What would you define as enough money?
Enough money so that if they were to go high and they said the cost of care is going to be, I'm making up numbers, $10,000 a month. If I was going to stay in a home for 10 years, right, it's over $1 million. It's not going to affect my family or affect my assets that I want to leave to make sure my spouse is taken care of, or maybe they want to leave inheritance to their loved ones.
Wow.
It's not going to affect them financially.
Wow.
Yeah. Different ways to look at it, right? Everybody's going to have a different way of looking at it.
Absolutely.
Yeah.
I mean, even if you cut that in half, though, and $500,000, I mean, I don't care if you have $5 million in the bank or net worth on the balance sheet. That's 10% of your legacy financially.
I have an application in my bag for you.
I think I'm too young. I think I'm too young.
I think you are too. I'm just playing.
You said you've been in the business for 31 years. That shows, and that means that you got in the business the year I was born. So just to put that factor out there.
Rub it in.
It's clear that you know more than me. So that's why I was excited to have you on here. Any parting thoughts before I let you go?
My parting thought is this. If you are thinking about long-term care insurance, or if you may need or you may not, it's worth at least looking at the numbers. You can always get the numbers and put it on the back burner or wait. Mm-hmm. Or you could, if it's affordable and you want to take action now, you can. At least look at what your options are. And there's a lot of great options available.
Yep. And how can our listeners find you?
They can call me anytime, 2 ways. I'm going to give out my cell phone, 818-481-9342. Office is 818-377-7260. Or they can email me a third way. It's scott@corpstrat.com.
I love it, Scott.
Okay.
Thank you so much for being with us today.
Thanks for having me.
Securities and investment advisory services offered through Next Financial Group, Inc., member FINRA SIPC. Prosperitas Financial is not an affiliate of Next Financial Group, Inc. This material is not intended as an offer or solicitation for the purchase of sale of any security or other financial instrument. Past performance does not guarantee future performance. All the views expressed are those of Robert Clark and Prosperitas Financial and not of those of Next Financial Group, Inc. Next does not offer tax or legal advice. The S&P 500 is a market cap weighted index composed of common stocks of 500 leading companies in the leading industries of the U.S. economy. The Dow Jones Industrial Average is a price weighted index of 30 actively traded blue chip stocks.